Now, the household survey from which the unemployment rate is derived was a real mess. The level of household employment is down over the last year. That's a pretty significant gap with the establishment survey, right? I mean, there has been some thought that household employment tends to lead turning points. The unemployment rate rose. It rose more significantly for prime age workers. If you look at the prime age employment rate, it's down against last year. That tends to be sort of a cleaner read in terms of what's going on. And the duration of unemployment keeps going up. We're at 10.5 weeks. That's the median duration of unemployment. That's a fresh high. So, there's some signs of kind of slackening in the labor market.
Welcome to RenMac Off Script. We're able to discuss markets, economics, policy, history, and life. It is the 6th of December, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Patton.
We're going to touch on today payrolls, the pardoning of Hunter Biden. We'll talk a little bit about Bitcoin, the Mag 7, small caps, and the market cycle clock. First, I'm going to adjust my camera. CNBC always gets me to push my camera down. I don't know really why. I guess because they like the ticker at the bottom, but I always feel like my head's getting chopped off. Though I'm sure that would be a popular outcome for some as well. Neil, it's Payroll Friday. Let's get right to you. It looked like we're about 7,000 jobs above the consensus. That's a pretty spot on number, I would say. But what's your take?
Well, my take is that the labor markets continue to gradually slow down. I think for the Fed, the report is basically meeting the threshold for a December cut. That being said, I think the next inflation number will matter more. But labor markets aren't collapsing, but they are cooling. And I think that's worth pointing out. The establishment survey was a bit stronger. But I think if you have to take a 2-month average, right? Because you had all these special factors in October that kind of unwound in November. So when you take a 2-month average, private employment is still running below 100,000. And you continue to see a pretty significant juicing of the labor market from the public sector. So private employment, 96,000 over the last 2 months. Total employment, 132,000. So you're seeing a pretty meaningful push there from the public sector. And I do think there are downside risks to state and local government spending next year. So it does sort of call some of that into question. Now, the household survey from which the unemployment rate is derived was a real mess. The level of household employment is down over the last year. That's a pretty significant gap with the establishment survey, right? I mean, there has been some thought that household employment tends to lead turning points. The unemployment rate rose. It rose more significantly for prime age workers. If you look at the prime age employment rate, it's down against last year. That tends to be sort of a cleaner read in terms of what's going on. And the duration of unemployment keeps going up. We're at 10.5 weeks. That's the median duration of unemployment. That's a fresh high. So there's some signs of kind of slackening in the labor market. I think that's important. Certainly I think the risks are somewhat higher, particularly the weakness in cyclical areas. I mean, it's hard to see why manufacturing picks up, right? I mean, the dollar has been strengthening, global growth is more sluggish. To the extent that we're pulling forward activity in Q4 because of tariffs, you'll see a hangover early next year, right? So that'll probably weigh on things. Labor markets it's not out of the woods, right? And so.
So what's this do to the Fed?
I think it basically confirms that they cut in December. They're probably going to pause in January, but look, the markets right now, I think, are priced for about 3 or 4 cuts next year.
Right.
And I think that's right. I think for me, it's more about the timing. Like, what if all those cuts happen like before the first half of next year? Right. I mean, that's kind of what I wonder a little bit about that because, this, at some point, this slow bleed, there's this nonlinear risk, right? I mean, The Beige Book today this week was talking about how profit margins are being squeezed. Um, so I do wonder a little bit about that. I mean, there's an enthusiasm that's out there in the market, and animal spirits, I think. You see that in some of these survey data points.
Yeah.
But at some level, like you need to actually see what's going to happen. And I do think an important theme for next year with respect to fiscal policy is just the whole concept of trade-offs. We haven't really had to deal with that in a long time, right? I mean, we've sort of age of abundance and we can do whatever the hell we want. And, we're gonna you know, hand out checks and transition to green energy and like we're gonna build the millions of new homes and like that's not happening. Okay. So I mean, this is all about, I mean, it's about trade-offs, right? I mean, I think the name of the game for next year is how do you create the space for Trump's legislative agenda? And the way to do it is basically to claw back things that the under Biden, right? I mean, so, whether that's removing green subsidies to create space for extension of tax cuts. I mean, it's basically a picking and choosing sort of thing. Um, and, that's not the kind of big bang sort of stimulus that you typically get with a new administration. Remember, right? Like every time someone comes in, it's always something, right? Bush had tax cuts. Obama had Recovery and Reinvestment Act. Trump had TCJA. Biden had CHIPS Act, IRA, American Rescue Plan, like on and on and on. And the truth is that, look, I mean, they went to the well one too many times, and that's kind of kneecapping a little bit the incoming team. And so, yeah, I mean, I think it's about trade-offs. And that's, to me, I mean, that basically means that there's value in the bond market. But I think for the economy, it means that the optimism that's out there right now, maybe people will give that a second look. I mean, you have to wonder whether that's really warranted.
Yeah. We do have some elevated sentiment. If you look, and we posted it to our Twitter account at RenMac LLC. The inflows for the spiders, right? The SPY, which is the S&P index, and other index related are certainly gravitating towards the upper end of inflows. That's not unusual. We always look at it year over year because you do have a pretty strong seasonal tendency actually to get inflows at the end of the year and at the beginning of the year. But this one is actually a little bit outsized. So there is, and our sentiment surveys are in the same spot, right? I would say about 65% of our sentiment surveys are suggesting a little bit too much enthusiasm in those animal spirits, as you mentioned. And I would say, look, there's a part of this business is about the hierarchy, right? What's first in line in terms of what's most important, and if kind of Bayesian decision tree it, right? If this, then that. If this, then that. This time of year, though, the seasonality kind of trumps all of those decisions and works its way up the hierarchy. So the seasonality is still very, very important. And while sentiment is running a little bit hot, and certainly would be something that if this were, say, July, we'd be a lot more concerned about, I think it probably pushes itself out into sometime in mid to late January, where it becomes more of an issue than it is here. But we'll see. I think the good news from just kind of that animal spirits that you're mentioning, Bitcoin crossed 100,000. Clearly, there's animal spirits in crypto and the support there. It's also happening to some of these other altcoins, if you will. But if we look at cyclicals versus defensives, those are making a new high. If we look at high beta versus low beta, that just broke out of about a 3 to 4 month base. So that's starting to improve as well. And then the IPO index making a new high. So those animal spirits are certainly flowing, and I think that's good news. We worry when they become too enthusiastic, and I think we're on the cusp of that. But again, I think that probably becomes a bigger issue in January than it does here between now and the end of the year in particular. Well, let's get to it, Steve. Yeah, you're on the docket. What I want to highlight is my as a Connecticut resident, resident. My senator, Mr. Blumenthal, passed, or I'm sorry, he introduced two bills, or one bill, one in 2022, the other this year, trying to prevent presidents from abusing their powers of the pardon. And it didn't make much progress. Clearly, that was designed not for President Biden, but for somebody else. And now he has shut the up. He hasn't talked about it at all. Unbelievable. But what do you say about this pardon and kind of what it does to the legacy, what it does to the perception, and maybe most interesting, and maybe all we need to know is what does it do to his approval rating? Like where was it pre-pardon, and do we have a number now after the pardon?
Well, the legacy and approval rating, I mean, look, let's be honest, they weren't great to begin with. It's not going to help. It's only going to hurt. The question is how much. I don't think anybody should be surprised that the president was going to pardon his son. I think what maybe irritated Democrats more was had he just left the decision there, just, I'm a father, I have an opportunity to help my son. People may have been a little more sympathetic to that. But when he took the additional step in his explanation as to blaming the politicization on the justice system. It sounded something like very much that President-elect Trump would say. And I think that sort of deprived Democrats from a talking point to go after Trump and sort of a belief that now that Biden sort of shares a similar view, that that'll embolden Trump and give him sort of a political fig leaf to go further on that. Again, I think the timing was should be surprising in that Hunter Biden was facing sentencing, I believe, next week. And Joe Biden did it, I believe, an hour before he left for a 3-day trip to Africa when he wasn't going to get many questions about this. So again, I don't know why people should really be that surprised. Do I think any legislation is going to move anywhere? No. Do I think that there'll be additional pardons to keep an eye on? Sure. I mean, Biden prior to this had been relatively, I guess, quiet and sort of a small number of pardons compared to past presidencies. I mean, usually sort of issue them on the way out here. And I guess they were probably fearful at the time of being sort of labeled soft on crime had he done that. And I think the thing now to keep an eye on too, aside from will he pardon his brother Jim? I think people are sort of anticipating that's going to happen. Is this idea of preemptive pardons for some of Trump's critics, like Liz Cheney and Anthony Fauci and others? That's what the Politico suggests is being discussed right now. And if that happens, then that's just even further eroding the intent.
Has that ever been, has that ever happened before?
I mean, I'm not a pardoned historian, but I mean, you think back, the intent of it were people who had committed a crime, shown some, active
Right.
the idea they sort of get out of jail free.
Allegedly, Steve.
Yeah,
Allegedly
well,
committed a
allegedly.
crime.
But I mean, if you just look at the scope, I mean, the one that they're sort of comparing it to is Gerald Ford's pardon of Richard Nixon. Even that was only 5 years compared to, I believe, over 10 for what he gave his son. And then there's some question too as to, is it really, can a president pardon himself? Do benefits for him, not just his family? And there's some scholars on the right that are arguing that, Joe Biden's doing this to prevent Hunter from testifying against him. Some saying now, well, Hunter can no longer use the Fifth Amendment defense in the case of he can't incriminate himself, that he should be called to testify. But there's lawyers who say, wait a minute, we can still invoke the Fifth. We don't want him to be potentially put himself at risk under state laws. Again, I'm not a lawyer. This is what's being bannered about. Republicans going to continue with inquisitions. I think that's sort of the thing to watch next year.
Yeah, I mean there are some interesting things going on. If you've got immunity, you can't plead the fifth. So, you get called into Congress and hey, what did Dad do? And I plead the fifth. Well, against what? You're not incriminating yourself. You can't be incriminated, right? So,
well, right. And if he lies to Congress, then he runs the risk of perjury because again, the pardon date went up to December 1st. And if he doesn't show up to Congress, then it's contempt of Congress. And Steve Bannon, an advisor to Trump, Peter Navarro, an advisor to Trump, they were both put into jail for that. So, I mean, I don't know that this is the last we're going to hear about the saga.
I didn't read it. This is not my lane, but somebody was mentioning that the pardon gave him basically 4 hours of untethered whatever he wants to do because it was December 1st and it was issued at like 8 p.m. So he could have officially gone out and, whatever, done whatever he wanted. Not,
Yeah,
crazy.
I mean,
As
I
he
guess
didn't, frankly.
technically,
Yeah. So within this, I always push back on this. I thought an interesting kind of game theory would have been pardoning Donald Trump, even though obviously he didn't need the pardon, but pardoning Donald Trump just as kind of an olive branch, right? Let's lower the temperature, and then maybe the next day or later that day you pardon Hunter, and therefore it kind of like gets maybe lost in the wash cycle a little bit. But no, he just came up guns a-blazing and said, my kid's good. Unbelievable. Unbelievable. Well, I mean, I don't blame him from a fatherly perspective. I understand it, but boy, there are better ways to handle it than emphatically saying no, 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 and then throwing your press secretary out there to defend you. And I mean, the fact that she still is sitting in that seat, I'd have I'd have walked off the plane in mid-flight, I think, versus taking it to that step. Unbelievable. What else is happening in Washington? That's more fun to talk about. It doesn't really have much policy consequence, but what else is happening in Washington?
most of the attention's on who Trump's naming to his cabinet. I think you're referencing some of the animal spirits earlier, and I think that's a reflection of some of his nominees, specifically on crypto, naming Paul Atkins to chair the SEC. Very much a crypto enthusiast, and somebody I believe was a former SEC commissioner. Can take a very much different role than Gary Gensler, the outgoing SEC chair, with respect to sort of this regulation by enforcement. We hear a lot about deregulation, and that's true, but that's definitely not what crypto wants. They want regulation. They want some rules of the road. And my guess is Atkins is going to play a pretty significant role there in drafting them. Related to crypto, you had Trump naming David Sachs to a new White House position, crypto and AI czar, again, sort of reinforcing that theory, have a direct link there to the president, supported by Elon Musk. I would pay attention to the AI portion of that title because I think that's really important when you think about just geopolitical struggles with China and what it's going to mean, who's going to be able to write the rules of the road there for this really important technology and to realize it. If you're China, you're looking at just productivity concerns with your declining population. So I think they're really investing heavily on AI, and the U.S. really needs to maintain that competitive base. So a lot of questions this week on the road about how much is Trump really going to go after big tech. I think from strategic technology, depending on how you're defining it, you don't want to put these firms at a competitive disadvantage with respect to these areas in China. And if you look at Trump naming some of the enforcement roles to the I guess the assistant attorney general there with antitrust, I don't think they're going to break up technology companies. They may find them and look to maybe discourage some behavior with respect to moderating social viewpoints, socially conservative viewpoints, suppressing them to try to get them to change that. But the idea of breaking up just doesn't seem consistent with a more encouraging environment for initial public offerings and also mergers and acquisitions. So.
Well, in terms of you hit on Bitcoin, Bitcoin looks to us, we thought and hoped it would be 90,000 by the end of the year. Clearly, we've blown through that as we got through 100K on its way to 103. That breakout, though, through 90 really sets the stage for 135 on the upside for 2025. So still more to go in our view on Bitcoin. I think, interestingly, the Mag 7, which has really been pretty sleepy for the last 6 to 9 months, is starting to improve. We're starting to see some breakouts, quiet breakouts. Usually people would be, pretty boisterous about the strength of some of these names. But seeing Apple break out, obviously Amazon's been strong. Netflix is probably one of the leaders there. Seeing Google try to break out, even Microsoft, which has been one of the softer names, if you will, over the last 6 months, has made a 65-day high yesterday. So, we're starting to see some of these Mag 7s improve. That's happening as small cap tech has started to, or sorry, small caps generally have started to improve. Small cap techs tech in particular has been improving. But I do think there's a lot of fanfare about small cap. And look, I think small cap's in an uptrend. It's a good looking chart. I think one of the things that we have to just keep in mind and reference is that if the Mag 7 is going to come back and start to perform, if this was a 6-9 month consolidation and they're now breaking out, it's going to be very hard for the Russell 2000 to match that. That's not bearish on the Russell 2000. I just think it's something to keep in mind for those who are allocating dollars. We did introduce a small cap report today, actually, and so have a look if you're small cap oriented, where we're going to go through some of those sectors and industry groups that are most aligned with the bullish call. Our market cycle clock, we released that on the 1st of December, as we do the 1st of every month, back into that solid ground, the lower left-hand zone. That implies that we've got a more benign inflation environment. We have a softer growth environment that tends to be extraordinarily bullish for equities, and still in a good spot. So I think we begin 2025 much like we began 2024 in this zone. We don't have momentum. We don't have sentiment on the right side like we did a year ago, but certainly the conditions or the preconditions for that bull market are still intact, which I think is important. And that implies roughly a 15% return from a projection of that next year. So that's very close to 7,000 on the S&P. Neil, what do you have next week?
So next week, the big news is going to be the inflation days. So we have CPI coming out, and then the producer price index coming out as well. Obviously, take the two together, you can pretty much get 90% of the way to an estimate for core PCE inflation. So I think that's like the last major data point before the Fed meeting. And it'll be important, right? I mean, if you get a firm inflation print, that'll probably throw some cold water on the current hopes that are now in the market about a December rate cut. Remember, there was an asymmetry going into this report, right, for jobs, because a strong number was expected because of all the unwind of the special factors. So a strong number wouldn't have really done much to pricing. The fact that the number was a little bit weaker, particularly in the household survey, did more to shift pricing towards December. So we'll see what the inflation numbers do next week. I'm also watching what's going on globally, particularly what it means for the dollar. Two things that kind of stood out to me today. Number one, our friends to the north in Canada, they posted a really, really crummy employment report. So you got a spike in unemployment, and people are talking now about jumbo cuts from the Bank of Canada. That's obviously pushing upward pressure on or downward pressure on the loonie, which obviously is important for us because that's a major trading partner. Across the Atlantic, Germany's economy continues to suck wind. So between the sort of political upheaval in France and the fact that German industrial production continues to decline, I mean, it's down, I think, 3 of the last 4 months, and it fell almost a percentage point in the latest month. You could take a look at our X account, our Twitter account for that chart, but it's shocking when you look at how weak German industrial production is. I mean, it's basically at the same level it was in 2005, I think.
Wow.
I mean, look, it's kind of interesting. I mean, between the gas divorce with Russia and kind of China now being more of a competitor than a complement to their economy, there's been a lot of trouble in the German industrial sector, and I mean, it's a little dicey over there. But anyway, I think that's obviously for us what that matters, because it's going to put upward pressure on the broad dollar exchange rate.
Right. Steve, what's on the docket next week in Washington?
You need to see Trump roll out more names for the cabinet. Again, I pay attention to some of these deputy selections that may be tasked more with running the agencies. Look for some of the regulatory picks to come through now. We saw the SEC chair announcement, could see picks to run other regulatory agencies, I guess as early as next week. And then Congress still trying to avoid government shutdown. Nobody's really anticipating that. It looks like everything's sort of set for this continuing resolution into next year. thing to watch on the Hill, maybe more behind the scenes, sort of jockeying for some of these committee chairs and committee assignments. That's going to be determined next week in both House Republicans and House Democrats. So that's something I'd watch just for the.
Is there any potential spillover effect from what's happening in France, or for that matter, maybe North Korea? I'm sorry, South Korea, with kind of a broader contagion of political thought? And I mean, I know it's a very specific issue, but Neil talks about Germany, kind of under the gun. Does this give rise to some of the opposing forces there to seize power?
Potentially, I mean, South Korea is an important ally. We talk about what does it mean with respect to our relationship with China. The ruling president that declared martial law was sort of viewed as more aligned with U.S. interests, a little more hawkish towards North Korea. So if he sort of pushed out the way in somebody a different direction, more the progressive party there, that's something to keep an eye on. In France, I just think about, what does this mean for Trump? Is probably going to see this as an opportunity to pivot towards Europe to get some concessions here, just given all the weakness there. Somebody looks to exploit that. I mean, I think it's one of the reasons he called Trudeau down to Mar-a-Lago the week before to recognizing his political situation. As, weakness for him is opportunity for Trump. So I think you're going to continue to see more of that.
Yeah, yeah. We're going to continue to watch the cyclicality. I think that's the play here. Continue through the end of the year and into January, really, particularly for those Trump haters. You're going to have the opportunity to probably fade the market sometime around the inauguration. That's historically, from a calendar perspective, the point where things tend to soften. So we'll see how that plays out. But for now, cyclicality still seems to be dominant. Beta seems to be dominant. All those things working in the bulls' favor here. S&P has support at roughly 5,700. We're looking at support on the 10-year yield at 404. Important there because obviously that's a nice tailwind for the cyclical names and for the beta names. So this contraction in yields, which, by the way, did not change trend. The yields are still in a downtrend. I know that that seems kind of far-fetched maybe, but in our model, which takes into account volatility, you really had to give it that berth to be able to stay in that downtrend, and we are stopped at 450, and here we are now on our way to what we think is 404, maybe potentially lower down to 360. So we'll continue to watch that. Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter for updates and all the other things that we do on a intra-week basis. Until then, I'm Jeff D. Raff.
I'm Neil Dutta.
And I'm Steve Pavlik.
We'll see you.